Wow. Wednesday afternoon kind of threw everybody for a loop, didn't it?
Yeah, it definitely got people's attention.
President Trump's announcement of that 10% tariff on everything brought in from other countries, plus those higher taxes on some of their biggest trading partners, really made a splash in the after-hour stock market.
It did, that's for sure.
And it's wild considering how we were hitting record highs just a few weeks ago. Big change of pace.
For sure, it shows how much the market reacts to big policy changes.
Yeah.
All those investors selling off their stock right away, you can tell they're nervous about what this means for the economy.
Absolutely. The numbers were pretty eye-opening. Shopify plunged 9%. Tesla and Apple each took a 7% hit. Nvidia dropped 5%. And it wasn't just them. The whole Magnificent Seven, all those tech giants that have been leading the way, they all felt the pressure. It was like the market suddenly hit the brakes and said, wait a minute, what does this really mean?
Yeah, exactly. I think those big drops for those leading growth companies show that people are worried about how these tariffs will hit their bottom line. Increased costs for parts, they import disruptions to their supply chains, maybe even less demand if other countries fight back. In our global economy, tariffs like this can really shake things up.
So with all this sudden change and all the worry it's causing investors, we thought it'd be a good time to dig into the wisdom of someone who's weathered plenty of market storms.
Warren Buffett.
Aditya.
He's seen it all.
We're going to pull out some key ideas from his decades of investing success to try and make sense of how the market's reacting and think about what might happen in the long term, without getting lost in all the daily ups and downs.
Smart move. Buffett's investment philosophy is all about sticking to solid principles and taking a long-term view. Really valuable when things are uncertain like this. And news can make people react emotionally. He helps you stay calm and rational.
All right, let's jump in. One thing Buffett talks about is his kind of unusual view on falling stock prices. He's famous for saying, if they buy a stock and think it's great if it goes up and bad if it goes down, we think the opposite. When it goes down, we love it because we'll buy more. Pretty different from how most of us feel when our portfolio's in the red, right?
Definitely. But it's interesting to think about why he feels that way. For someone who's always looking to invest, a net buyer of stocks, like he says, lower prices are a good thing. Think of it this way. If you always buy groceries, wouldn't you be happy if your favorite things went on sale? For Buffett, a drop in the price of a company he believes in means he can buy more of something good for the same money.
Right. It's like if you knew a company was worth a lot in the long run and the price drops, especially it's because of something happening in the whole market, not because the company itself is doing badly. It's like getting a discount. You get more ownership in a business you like for less. And, it's funny. Elon Musk actually said something similar to his Tesla employees recently. He said Tesla stock goes up and it goes down, but it's still the same company. It's just people's perception of the future that changes. It's like saying just because the stock price dips doesn't mean the actual business is any worse.
That's a good comparison. Musk's point is that there's a difference between a company's real value, based on its fundamentals, how much it could earn its competitive edge, and how the market feels about it, which can change quickly. Those tariffs will definitely have an impact in the short term. They could affect companies' earnings and how fast they grow. But what happens over the long haul is anyone's guess.
Totally. We can guess how these tariffs might affect different industries and the whole U.S. economy. But trying to say for sure what things will look like in 5 or 10 years, that's a tough game. And you said it. We don't even know if these tariffs will stick around. They could change, be canceled. Who knows what else could happen?
And this brings up a really important question. What's your time frame for investing? Buffett's whole philosophy is about long-term thinking. He's not trying to time the market or make a quick buck. His strategy, it's called value investing. He looks for fundamentally strong companies that he thinks the market is undervaluing, meaning their stock price is lower than their real worth. And he holds on to them through the ups and downs. It's the opposite of day trading where people are just focused on quick price changes.
So it sounds like the big takeaway here is even though that after-hours sell-off was scary, especially if you're watching prices every day, if you're in it for the long haul and you believe in the companies you own, this kind of dip could actually be a good thing. A chance to buy more at a better price. But it takes discipline. You got to fight that urge to panic when everyone else is.
Oh, yeah. You have to consciously separate those short-term reactions from your long-term plan. If the reasons you invested in those companies haven't changed because of these tariffs, their strengths, their growth potential, their management, then a lower price might actually be good news.
Okay, let's switch gears a bit. Let's talk about another big part of Buffett's approach, his belief in buying American stocks. He's been a big supporter of investing in American businesses and the power of American capitalism for a long time.
What's amazing is how strong his belief is. Even when the economy is shaky here in the U.S. and around the world, he always talks about how much potential the American economy and its businesses have. Remember his famous op-ed in the New York Times back in 2008, right in the middle of the financial crisis? He told everyone to buy American I am. That really shows how much he believes this.
Yeah. And it wasn't just because of that one crisis. More recently, in his letter to Berkshire Hathaway shareholders, he said again that his success and his company's success are tied to American businesses doing well, and that they're still focused on investing in mostly American equities. He's been saying this for years. It's a clear message.
Of course, having some international investments can be a good idea for a balanced portfolio, but Buffett keeps talking about American stocks because the U.S. market has done so well over time. And because the U.S. is great at innovation and growing the economy, he's basically betting on the American economy staying strong. And, he often likes companies with what he calls economic moats, like strong competitive advantages that he thinks will help them succeed in the U.S. for years to come.
Right. He's not totally ignoring opportunities outside the U.S. Berkshire Hathaway has invested internationally, but his main focus is on American companies. It's all about betting on America through good times and bad.
Exactly. And thinking about this market dip that happened because of the tariffs, it's good to remember the bigger picture. The U.S. stock market has bounced back from some pretty rough times.
Yeah.
The oil embargoes in the 70s, stagflation, the Black Monday crash in 87, the dot-com bubble bursting, 9/11, the financial crisis in 2008 and 2009, even the COVID-19 pandemic.
It's easy to think what's happening now is totally new and different. But looking back at history can give us some perspective. The U.S. stock market is pretty resilient. Those recoveries didn't always happen right away, and there were definitely some bumps along the road, but overall the trend has been upwards.
Right. While we can't guarantee the future based on the past, looking at historical patterns can help us think about what might happen. It reminds us that even when the market drops, because of big policy changes like this, it often recovers and grows again.
So to wrap this up, we've talked about two main ideas from Warren Buffett that seem especially relevant now with how the market's reacting to these tariffs. First is his idea that market drops can be opportunities for long-term investors to buy good companies at lower prices. And second, his long-held belief that American businesses are strong and have a bright future.
And these two ideas really go together. Buffett's willing to buy when others are selling because he truly believes in the long-term value and potential of American companies. He sees those short-term market swings not as a sign of weakness, but as a chance to buy into those businesses at a better price.
Exactly. It can be nerve-wracking to see the market go up and down like it did after those tariffs were announced. But if we understand these principles from a legendary investor like Warren Buffett, it can help us stay calm and rational. We can look past the headlines and think about the long game.
Totally. It helps us shift our focus from those daily price changes to the real worth and long-term potential of the businesses, and to how resilient the American economy has been.
So here's something to think about as you're processing all of this. Think about the big economic changes and policy changes that have happened in American history. Think about how those events ended up shaping American business and industry. Then ask yourself, does this situation with these tariffs feel like one of those big turning points that will change everything? Or is it more likely to be a temporary bump in the road, a time of adjustment within the bigger story of American economic strength? It's something to consider as we all figure out what's next.
Yeah, it is.
Thanks for joining us for this deep dive. We'll catch you next time.
See you then.